Hello and welcome to another trading video recap for a daytradersjourney.com. This is on the E-mini S&P 500 on a 3-minute time frame, 3-minute bar time frame on the September 1st, 2015. So what we want to notice here initially is that all these circles, the blue circles are long trades, trades that are profitable. Red circles or pink circles are the ones that are losses. And I only took one trade today on the E-mini S&P because I was not in front of the computer today for the whole session. My trade was here. So all the other circles here are trades that were setups that could have been taken based on my rules of trading and my money management. So first off, we have price breaking above the 6-minute opening range here because these are 3-minute bars, and we have a setup here which is a second entry long and explains here. All these circles have explanations to them. Here we have a second entry that's kind of hidden, that you really can't, it's not as obvious. And here, the reason being, you have your swing high here, you start your count here, and you have your first break of the previous bar here, and with this wick. So that's your first entry. Now this bar, this green bar, opens here, right? This line comes down here, breaking the low of this previous bar here, and then breaking the high of this previous bar here. So basically this one bar created a second entry in itself. So we have, we have a swing high here, we have our first entry with this bar here, then break below the previous bar and break above the previous bar to create a second entry here, and so you could have gone long above this green bar as your second entry. We don't go long on doji bars or bearish bars. We only go long on bullish bars. So this bar was bullish. You'd go long above that break of that bar, which is 1930.50. The stop loss though is way down here, and one tick below the swing low, and the swing low is at 1925. So 1924.75 would be my stop. I don't like to take trades on the E-mini S&P on this time frame more than 4-point stop loss. So 4-point stop loss is my max. So if my stop's going to be 24.75, I want my entry to be no more than 1928.75. So up here we're way above that. So what I do is I skip the trade, or I wait for it to retrace, and it did retrace without moving too far up, and I got in at 28. You could have got in at 28.75, and it would have been, you would have been okay. You would have made it to the first target, and your trailing stop would have taken you out. So that's a long little hidden second entry here I wanted to point out and describe in detail. There's many other trades that happened today. So you can see here we have this losing trade here would have been as a good example of what to do when you have a failed second entry long, or a failed second entry long or short. And that is to do your count. We came up here, and then once you had the swing dots here, swing high dots here, you start your count, and you have your count. Here's 1. Here's your first entry above this previous bar, and then it breaks down again, and then you have your second entry long above this bullish bar here. So you would have got in here roughly at 1932. Stop loss would have been roughly 1928.50. So that puts you roughly at 3.5 points. Let's see here, 3 points, yeah, 3.5 points. So you would have been taking this trade here, and our first target, or our break-even level, is at 2 points. So at 2 points, we never reached that because we're at 32. We never got up to 1934. We came with one tick of that level, but didn't reach it. So price came down, and then you would have gotten stopped out once price on this red bar here. So once we've taken the second entry long and it fails before reaching our break-even point, I always draw the support line of that second entry trade that I took, and that support line is denoted by this dashed line here, horizontal line here. So And I use this line for taking re-entry trades or other advanced type trades, which is like a reversal trade, and I'm going to show that one to you here now. So basically, once we had this loss, I'm looking for either a re-entry or a reversal type of trade setup. Re-entry means going back in the same direction. Reversal means going in the opposite direction. So what we had happen here is we got stopped out, this big bearish bar here, sorry. And what happened? Price started to creep back up. And what did it do? It hit that support line I drew and treated it as resistance. And price also respected the EMAs as well as resistance. So when I saw this going up here, nothing happened. I was waiting to see what price was going to do. Then all of a sudden it hit this area and then came down hard here. And so once I saw that happening, and look below here, look for some bearishness in the advanced decliners and also the tick, and I saw that there too. I decided to take the trade. And well, I would have taken the trade. These are trades I did not take live. These are just recap trades. So your entry would have been 1926.50, and you would have taken this all the way down to the break-even point, which is 2 points, 24.50, and it went further and further. So the point of the story here is when you get stopped out, you don't get discouraged. Look for re-entries or look for reversal type setups. And this is the first time I'm showing this reversal type setup on my blog. And I have my description here of that written out here so you can see. So again, this is a really an advanced type of setup here, but it's very key to learn it because again, when you take these losses, you don't want to just give up and wait for another entry. Later on, you can sometimes take advantage of the reversals that happen live in the market. This was a riskier trade. That's why it's more advanced because you're in the opening 6-minute opening range still, this blue shaded area. So this is usually a chop zone. So, but when I saw this setup and I saw this bounce right cleanly off of the EMAs and this support line, which became resistance, it's a trade that definitely is advanced level, but is what you call basically a failed second entry long trade that turns to a short trade based on that. So you're not counting for second entries here. You're just looking for a break, which basically I got a break down here at 26.50, which is basically a first entry trade. You're not really waiting for a second entry on these reversals or re-entries. So hopefully that makes sense. I can go over it again with more detail in another video. But again, those are more advanced trades. I wanted to go over. And the rest were pretty much textbook second entry trades. Like here, you have a swing low here, first entry, and then here's your second entry below this red bar here. And that's the live trade I took, secondary short. I got a partial win. It got past my break-even level and then pulled back, and my trailing stop took me out of that trade. And here are some examples of re-entry trades. Once you get stopped out for a partial profit before your full target is hit, you also want to look for re-entries. And here's two circled areas where you could have got in on some re-entries based on the breaks of the previous bars to the downside. And here's my resistance line. When I drew the resistance line whenever I take a second entry that either fails or I get out early or get taken out early, and look for re-entries into that position, and using this as a resistance line, because as long as price stays below that resistance line of that second entry trade that I took, I feel that the bearishness or the reason I got in that trade to begin with is still valid. Once it breaks above that, then all bets are off and you're looking for possible reversal to the upside. Hopefully that makes sense. Again, I can go in more detail on another video. Please leave your comments and questions below. And